In the previous section, we examined the different ways to hold title in Arizona, including sole and separate property, community property, joint tenancy, and tenancy in common. Each ownership form carries its own legal implications, especially when it comes to transfer, inheritance, and taxation. Among these, the distinction between community property and sole and separate property is perhaps the most significant in Arizona, given the state's long-standing recognition of marital property rights. Understanding how property is classified when acquired before and during marriage is essential for real estate professionals, as these designations determine ownership, control, and how property is conveyed or divided upon death or divorce. Arizona is a community property state, meaning that most property acquired by either spouse during marriage is presumed to belong equally to both spouses. This presumption arises under ARS, Paragraph 25-11, which defines community property as all property acquired during marriage, except that which is received by gift, devise, or descent. Conversely, property owned by one spouse before marriage or acquired individually by gift or inheritance is classified as sole and separate property under ARS. Paragraph 25-13. Sole and separate property. Sole and separate property is any property owned exclusively by one spouse and not subject to the equal ownership presumption of community property. This includes property acquired before marriage, property received by one spouse during marriage through inheritance or gift, property acquired after a legal decree of separation. For example, if David purchases a home in Phoenix while single and later marries, that home remains his sole and separate property unless he takes steps to add his spouse to title. Similarly, if during marriage David inherits a cabin in Prescott from his father, that inheritance remains separate property so long as he keeps it segregated from marital assets. A common issue arises when sole and separate property becomes commingled with community property. For instance, if David uses community funds to pay the mortgage or improve the home purchased before marriage, a portion of the property may be considered community in nature, giving the non-owning spouse a financial interest. Arizona courts have consistently held that when separate and community property are mixed, the burden of proof rests on the spouse claiming separate ownership to trace its origin clearly. The case, Blaine v. Blaine, 1987, reaffirmed this rule, emphasizing that clear documentation and intent are necessary to preserve separate property status. Community property. Under Arizona's community property system, property acquired by either spouse during marriage is owned equally, regardless of who earned the income or whose name appears on title. This principle reflects the legal and economic partnership of marriage. Both spouses must sign any deed, mortgage, or encumbrance involving community property to ensure mutual consent and protect the other's interest. For example, if Maria and Luis purchase a Chandler home while married using their combined income, both own an undivided 1/2 interest in that property. If Maria attempts to sell or refinance without Luis's consent, the transaction would be invalid because it violates his community interest. This equal ownership also extends to debts incurred during marriage. Creditors can pursue community property to satisfy obligations arising from either spouse's actions. However, community property acquired during marriage does not include inheritances or gifts to one spouse, which remain separate unless intentionally combined with community assets. Property acquired before and during marriage. The timing of acquisition is critical in determining whether property is community or separate. Property purchased before marriage is automatically separate property, but its status can change through actions taken after marriage. For instance, if the owning spouse executes a quit-claim deed or disclaimer deed adding the other spouse to title, the property may convert to community property. Courts will evaluate the intent behind the transaction to determine if a gift to the marital community was intended. Property acquired during marriage, on the other hand, is presumed community property unless the acquiring spouse can prove otherwise. This presumption can be rebutted only through clear evidence, such as inheritance documents or prenuptial agreements. In Porter v. Porter, 1981, the Arizona Supreme Court ruled that a husband's claim of sole ownership of property purchased during marriage failed because he could not prove it was acquired with separate funds. The court emphasized that community property presumption is strong and can only be overcome by clear and convincing evidence. Impact on title and conveyance. Because Arizona law presumes community ownership during marriage, title companies often require both spouses to sign closing documents, even if the property appears in one name. This prevents future disputes and ensures that any potential community interest is released. If a married person wishes to acquire property as sole and separate, the non-purchasing spouse must sign a disclaimer deed, stating that they have no legal claim to the property. This practice aligns with ARS paragraph 33, 452, which requires both spouses' consent for conveyances of community real property. For example, if Jennifer buys a Scottsdale condo using only her inheritance money during marriage, her husband must execute a disclaimer deed confirming that the purchase is her sole and separate property. Without this, the property could later be presumed community, especially if marital funds are used for maintenance or improvement. Tax and estate implications. Ownership classification also affects taxation and inheritance. Community property enjoys a double step-up in basis for capital gains upon one spouse's death, while separate property receives only a single step-up. This makes community property with right of survivorship particularly advantageous for married couples, as the surviving spouse can sell the property with minimal capital gains tax. In estate matters, community property ensures that each spouse has testamentary control over their half, unless the property is held with survivorship rights. Sole and separate property, on the other hand, passes through the owner's estate and may require probate unless held in a trust. Court cases and statutory guidance. Arizona courts have reinforced the significance of ownership classification through multiple rulings. In Toth v. Toth, 1997, the Arizona Supreme Court held that gifts made by one spouse to the other can convert separate property into community property when intent to share ownership is clearly demonstrated. In Bender v. Bender, 1994, the court affirmed that property acquired during marriage is presumed community unless proven otherwise. Together, these cases highlight the importance of documenting ownership intent and maintaining clear financial separation between community and separate assets. Discussion. Why is it important for married couples in Arizona to understand the distinction between community and separate property? Answer. Because ownership determines control, liability, inheritance, and tax consequences, especially when property is acquired before or during marriage. If a spouse receives an inheritance during marriage, but deposits it into a joint account, what may happen? Answer. The inheritance may lose its separate status and be considered community property due to commingling. What document can protect a spouse's separate property rights when purchasing property during marriage? Answer. A disclaimer deed signed by the non-purchasing spouse, confirming no community interest in the property. Review summary. Arizona's community property system establishes that property acquired during marriage belongs equally to both spouses, while property owned before marriage or received individually as a gift or inheritance remains separate. The classification hinges on when and how property is acquired, whether marital funds are used for its maintenance, and whether actions such as commingling or title changes occur. Statutes such as ARS, PRV 25-11, 25-13, and 33-452 provide the legal framework for ownership determination, while cases like Porter v. Porter, Toth v. Toth, and Blaine v. Blaine illustrate how courts interpret these laws in practice. Understanding these distinctions allows real estate professionals to advise clients accurately, protect marital interests, and ensure clear title transfer.